Good morning, traders. This is Michael coming to you from GammaEdge on Friday, March 28th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at the market trend model. We discussed the previous day that the market trend model was starting off in a bearish state. This market trend model is based on the tick, which is industry standard of buying versus selling of market participants. We have added a time series to this to allow us to aggregate the tick day over day. The bolded white line that you look at here is our instantaneous CT intraday cumulative tick aggregated. That is buyers versus sellers. Sellers continue to maintain control. We did see some flattening of the cumulative tick yesterday, which indicating that it was a kind of a push-pull between buyers and sellers and almost a stalemate. Heading into the afternoon, even though we did trend down and close below the previous day close. So that again remains in a bearish state. The filtered cumulative tick, which filters out larger orders, plus 1,000, minus 1,000, that's basically institutional orders or larger players. Did see some selling come into the afternoon, but was not extreme as we've seen the previous days. So again, market participants were not selling as much as the previous day. And the breadth indicator up here, new highs versus new lows, we continue to see the new lows outpace new highs, so really not a good indication for the bulls at the moment. If we wanted to see the bullish or the bearish stance change to bullish, we would need to see this bolded CT start to move back above these moving averages from a lower left to upper right, indicating that buyers are trying to take back control of the market. Obviously staying under our colored ribbon, which is our longer term overall tick aggregate and state of moving averages, is still bearish. So any short-term bounce, we are cautionary that we could be prone to failure and see some retracement back down or even through the overall lows. So again, bearish state to start the morning with our market trend model. Basically, we want to be on the right side of the market. So this is just telling that sellers continue to be in control overall of the overall market. Moving on to our SPXA, this is our larger quarterly players within the overall option structure. We like to call this our tankers or our cruise ship, as this is larger institutional notional value positioned for longer term. It continues to be put dominated within the overall structure up and down. 5,700 continues to be an important level, 5,650 to the downside, and then 5,625. So again, being put dominated, put speculators are in overall control, and this is a bearish state within that larger SPXA. And we separate the SPXA from the SPXP, which is shorter term expiries, 0DT, and weekly expiries, just to filter out and see what the overall structure looks like between these two market players within the overall structure. SPXP, this is the all expiries turned on, as you see over here. So this includes every expiry on out in time as indicated. Our implied open roughly right now would be 5,670, opening below 5,700, again put dominated. So put speculators continue to be in control. We have a significant amount of in-the-money puts overhead. This will be difficult for price appreciation as the, again, put speculators maintain control of the overall market. If we do see this start to change, we will start to see the red negative net delta start turning towards green, which means we do have call speculators coming in. That would be indicating more positive delta and more positive gamma into the overall structure, which could lead to some sort of price appreciation. The transition areas that we talk about, this would be areas where we move into a more call-dominated environment from a more put-dominated environment. Continues to be very wide, moving above these levels or into the transition. We expect some sort of choppy price action back and forth. And then if we get above these transition areas would be areas where we'd move into an environment where we would anticipate price appreciation. As of now, we continue to be under those transition areas, which we will maintain a bearish overall state as we are, again, put dominated and negative gamma environment. Moving on to the SPXP. Again, this is shorter term time frame. 0 DTE is indicated over here by this tile turned on. Again, we are below transitions with our implied open at roughly 5670, below 5700. The transition areas are just areas, again, where we transition from a more put dominated environment, negative gamma, could be to a more call dominated positive gamma environment, which could lead to price appreciation. So the first step for the bulls would need to be get above this DEX and GEX transition at 56 or 5730, 5735, as we've outlined here with this white transition area. And then we have our what we call our drunken sailor range. This is just an area with lower exposure where we anticipate some choppiness action within this overall area. Again, this was 5675 up towards 5740. Again, transition area there also. So price appreciation would most likely stall within these overall areas unless we see a significant amount of call speculation come into the environment. In the money calls below us, this can be supportive, as we've seen with the overall structure. Move down, we want to see us stay above that 5675, that larger negative net delta. If you're a bull, if you're a bear, below that 5675, we could see some more weakness down towards 5650. SPXP, this is our net stat command, basically telling us where the highest sensitivity areas are, above spot price, which would be the right-hand plane, and below spot price, which would be the left-hand plane. Again, 5,700 to the upside, and then we see those in the money puts sitting at 5,750. To the downside, we've discussed 5,675 could be supportive due to in the money calls below us and positive delta. So we'll continue to watch that area intently at the open. Net stat command, we forced this price at 5670, which was the implied open, indicating that we do have in the money puts above us and in the money calls below us. Again, 5670, 5675 is going to be an important area to watch at the open. If we're below it, we would maintain a more bearish state. If we're above it, we have the opportunity for price appreciation up towards that 5700 level and that transition area that we discussed earlier. This is our overall market breadth of call dominated versus put dominated stocks. This is basically just telling us how the individual equities are positioned. We continue to see the call dominated stocks fall, and then the put dominated stocks really maintain status quo. But this is really the indication that call speculators continue to exit the market on individual equities. We want to see this call dominated stocks obviously turn back up, indicating market participants are adding more positive delta and adding more out of the money call speculation to the market, which would overall indicate possible price appreciation in those individual equities and then an overall SPX. The put dominated stocks, obviously, if we see this start to spike, then out of the money put speculators are continuing to speculate to the downside, which would be adding negative delta and overall negative gamma environment, which would indicate that we may see some price depreciation. So heading into the open this morning, really quickly, we've drawn our transition areas and our drunken sailor range. Implied open right now, we've backed down to 5676. So again, opening right around that negative GEX level, below negative GEX, everything is more put dominated. So that would be indicating more weakness and bearishness. Above that negative GEX level, that 5675 we talked about could be supportive heading into the open. And then the first area that we would look for some sort of price reaction would be the bottom of drunken sailor range, 5700, round level, Livermore level. If we do get in the drunken sailor range, we would anticipate choppiness. And then the next area above us would be the transition level at 5730, where we look for a price reaction, where it was a great opportunity for a short yesterday. So we'll continue to watch these areas. Again, we remain bearish, shorting any rallies unless we cross transition, which would lead to a more positive gamma, positive delta environment with the possible of price appreciation. So thanks for joining us this morning. We'll be in the Discord in a few minutes. Let's make it a great day.